Hello, my name is Isabella Coughlin. I'm from Salem High School, and today I'm going to be pitching Adobe. I think there's more to this company than initially meets the eye, and I'm excited to share it with you all today. Adobe was founded in 1982, and they had some pretty revolutionary inventions, but today they operate in creative and digital marketing software industries. They operate under three main segments: digital media, which includes products such as Photoshop; digital experience, which includes their digital marketing tools; and publishing and advertising. They've been subscription based since 2013, and they've entered the AI world, which we'll talk about in a couple of slides. So I'm going to jump right into my investment thesis. Adobe's differentiation in this market and their diversified product portfolio is going to allow them to beat the competitors, see sustained demand for all of their products, and really grow their company in the next coming years. Dominance in creative software. They've been the dominant player in this market for some time now, and despite some incoming threats, we're going to see that they're going to hold on to this large market share. Expansion into digital marketing. This market is rapidly expanding, and though Adobe is not one of the main players currently, we're going to see them capitalize on this expansion. And finally, industry-leading financials. Adobe has stellar financials, and this is really what solidifies them as a great investment. So what's going to be driving this revenue? We've already been seeing an explosion in demand for digital content. From social media to marketing purposes, we're seeing a great increased demand for this. And because Adobe is so competitively positioned in the creative software market, they're really going to capitalize on this explosion of demand. Next up, we have AI innovation. So this differentiating factor that I was talking about is that Adobe is the only company that is currently offering fully integrated end-to-end software solutions, and AI is helping them enhance that. So as AI in marketing continues to expand, Adobe is going to capitalize on this greatly, and that will drive their revenue growth. Next, expansion of digital marketing. This market is also going to be seeing a great expansion, and this will create sustained demand for Adobe's Experience Cloud and drive revenue growth well into the coming years. And of course, subscription model. 95% of revenue comes from these subscriptions. It's a very steady and reliable source of income for the company, and that's going to be really important as the company continues to grow. So taking a look at the industry, again, Adobe is not one of the main players in digital marketing software at the moment. Those are names like Oracle, Microsoft, Google, Salesforce, etc. But again, this differentiating factor is going to allow Adobe to separate from the pack and expand their market share here. And then creative software, again, despite incoming names such as Canva, which I'm sure many of you have heard of, they only have a 4% share of this market, while Adobe, we can see, has a very large share of this graph. And so they're going to be able to hold on to this share and keep their competitive advantage here. As far as competitive positioning, Adobe is very well positioned, mostly due to their very strong brand and the fact that they're the industry standard. Many people have been trained on Adobe, and that creates very high switching costs because it is ingrained into the workflows of many creatives, many professionals, many companies. And so Adobe is very well protected from new entrants, from substitutes, and even from competitive rivalries, although there are lots of competitors in this market. Investment risks. So as far as legal challenges, Adobe is handling lots of sensitive information with digital marketing tools, and they will need to be very careful of that as to avoid any uncertainty. As far as regulatory challenges, they're a very big company, and they've had many strategic acquisitions in the past, although they recently had a failed acquisition of another graphic design company, which reflected poorly on them. So they will need to navigate this landscape very carefully. Increasing competition in this day and age is just going to be a thing, unfortunately. There's lots of competition in the tech industry, in the software industry, and so Adobe is going to need to continually innovate and keep up their competitive price points in order to differentiate themselves from this competition. Deceleration of growth. Adobe is likely reaching a stage of maturation in their company, right? They were founded in 1982. And so as their products kind of saturate this market, they're seeing a deceleration of growth. That's not to say they aren't growing, it's just not as quickly as before. And so again, they're going to need to innovate, and I think that they are actually going to see a rejuvenation of this company life cycle as they continue to integrate AI, which we're going to get into in just a little bit. And finally, macroeconomic downturns. This industry is a little bit more susceptible than other industries to macroeconomic downturns, and especially Adobe, because their products are offered at premium price points, and so they will need to be careful of macroeconomic factors. AI. We can't talk about Adobe without talking about AI. The main risk here is a lot of investor uncertainty about them having trouble monetizing AI. So there's been a lot of sell-off recently because of that, and people are concerned also about high competition. However, I want to draw attention to this red graph right here. This is from their Q1 2025 earnings report. They reported 125 million ARR in AI standalone revenue. Investors were quite unhappy with this because this is a very, very small fraction of their overall ARR. However, what I want to draw more attention to is this AI-influenced ARR figure, which is measured through customer retention of products and customer satisfaction, etc. They actually reported 3.5 billion ARR in AI-influenced revenue. This is far more important than just the AI standalone, because AI is enhancing these existing products and it is enabling these end-to-end solutions and this differentiation that we talked about. And so this is really the more important figure that shows that Adobe is actually profiting greatly off of AI integration. Financial analysis. So again, Adobe has stellar financials. Despite this slowed revenue growth that I mentioned previously, their gross profit margins have been increasing, which is a great sign that Adobe is going to continue to stay profitable. They've also got great return on equity and return on invested capital, which is going to be very important as they continue to invest in AI and R&D. And they also have increasing cash flow over the years, which is going to be very important in the next slide. So I used a DCF model to find a share price of $522.43 per share, which is a 34% upside. As far as the relative valuation goes, they're trading at 55% lower than the median of these peers, and they're trading at 9% less than the sector median, which signals to me that Adobe is highly undervalued and it's a very compelling investment opportunity right now. So how do we know it's working? Again, Adobe is the only software company that is offering these end-to-end software solutions, aiding in all steps of the marketing process in one unified ecosystem. These 22,000 enterprise customers are taking notice of this. They're seeing reduced production times by up to 70% and increasing their ROI. We know that companies like this because we've seen 100% year-over-year increase in joint marketing and creative software deals. So we can see that this differentiation factor of Adobe is working, and they're going to continue to profit off of this, and none of these other competitors are doing this, and they're going to fall behind Adobe for this reason. As far as ESG, Adobe scores very well. They've pledged net zero emissions by 2050. They frequently partner with sustainability organizations as well as nonprofits. Their Adobe Foundation supports equality and digital literacy, and they recently made a very generous donation to 11 NGOs to support these causes. Adobe for All is their mantra. They're a very diverse and inclusive workforce, and just a great place overall to work. Finally, I just want to take a look at some stock activity. So, pandemic-driven boom from 2020 to really the start of 2022, when everything shifted online, Adobe's products saw increased relevancy, and so that pushed the stock price up quite a bit. In 2023, we saw a downturn due to macroeconomic factors and market trends, as well as that failed Figma acquisition that I mentioned earlier, so that is why we saw a lot of sell-offs there. Finally, this recent decline all the way over in 2025, right? This again is due mostly to AI uncertainty, which I believe is far overstated. As we saw in that figure, the 3.5 billion ARR in AI influenced revenue is very important, and we can see that companies are enjoying this differentiating factor. They're seeing increased ROI, and companies are going to continue to invest in Adobe's products, and they're going to see lots of growth because of that. So again, I rate Adobe a buy at a target price of $522 a share with an upside of 34%. I hope that this was a compelling presentation. Thank you.